Welcome. In this video, I'm going to tell you pretty much everything you need to know about Coupang's upcoming IPO. South Korea's e-commerce giant is currently planning an IPO in the New York Stock Exchange on March 11th. So if you are eyeing the event or even considering participating in the IPO, I hope this video provides you some insights. Let's start by taking a look at the company's history. Coupang was founded by Bong Kim, who graduated from Harvard Business School and previously worked at Boston Consulting Group. And by the time Kim founded Coupang, there were already existing players in the South Korean e-commerce market. Despite its late entry, Coupang still became one of the most successful companies in the industry for two reasons: customer-oriented service and express delivery. While Coupang's competitors delayed the delivery of customer products until transactions were completed, Coupang differentiated its service by shipping products immediately after orders took place. If a Coupang customer's product delivery got delayed, coupons known as Coupang Cash were issued to the consumer, which significantly enhanced the customer experience. South Korea is an extremely densely populated country. In Seoul alone, 10 million people, or 1/5 of the country's population, live in a single city. Kim was well aware of this and that there was a high demand for express delivery services. So in 2014, Coupang launched a one-day shipping service called Coupang Rocket Delivery. This innovative model made a strong enough impression on SoftBank CEO Masayoshi Son that the firm invested $1 billion into Coupang in 2015, just a year after Coupang introduced its express delivery model. Since then, Coupang has invested so aggressively in logistics infrastructure that despite its rapid sales growth, the company's capital was always impaired. However, thanks to Masayoshi Son and SoftBank, Coupang was able to source an additional $2 billion investment in 2018 and continued its expansion. SoftBank's investment is particularly noteworthy as at that time, SoftBank was struggling from a heavy loss driven by WeWork. Luckily, the additional $2 billion investment into Coupang during this period turned out to be fruitful, as Coupang is expected to be valued at $55 billion at the IPO, making SoftBank's $3 billion investment worth $21 billion today. Once Coupang successfully positioned itself as a leading player in the e-commerce industry, it started expanding its realm into new industries such as food delivery and media streaming services by launching Coupang Eats and Coupang Play. So now, let's jump into our next topic, the IPO. On March 1st, Coupang finally submitted its filing for IPO on the New York Stock Exchange. The IPO is the fourth largest IPO by an Asian company, or the largest IPO by a foreign company after Alibaba's 2014 debut. For those who may wonder why Coupang filed for an IPO with the New York Stock Exchange rather than the Nasdaq or the South Korean exchange, here's why. First of all, listing on the New York Stock Exchange, which can attract overwhelmingly larger capital than listing on Nasdaq, is beneficial for early investors' exit and mobilization of funds for subsequent investments as long as the listing conditions are met. Coupang is expected to garner a high valuation at its IPO, reflecting the sharp reduction in operating losses, which was pointed out earlier, as well as demand surge for its service during the COVID pandemic. Another big reason for Coupang's listing in the US is the system that allows founders to secure their management rights. This system is called the differential voting system. As Coupang is still a growing company that needs continuous investment in physical and human resources on a large scale, dilution of the majority stake caused by capital attraction is inevitable. In other words, the company may need an institutional supplement to prevent a management crisis, such as one supported by the differential voting rights system, a legal framework that is still under consideration in Korea. Differential voting rights system allows the issuers to raise more capital without having to dilute their ownership structure, fund larger projects, and avoid a hostile takeover by separating its voting rights by different classes of stocks. According to Coupang's S1 filing, Class A refers to common stocks and Class B refers to the shares that are solely owned by Chairman Bong Kim. Class B shares have 29 times more voting power than one Class A stock. This would make Kim's management a lot easier as he can secure his voting rights while still being able to list Coupang on the public market. Now, let's take a closer look into the IPO details. As you can see on the chart, after the IPO, the SoftBank Vision Fund will own 36.8% of Class A shares, and both Green Oaks Capital Partners and Neo Meta will own 18.5%. But as I mentioned earlier, because Class B stock has 29 times more voting power than Class A, Chairman Kim will maintain 76.7% of the total voting power after the offering. Currently, the company expects to price its IPO at $27 to $30 per share, potentially raising $3.6 billion and valuing the company at $46 billion to $51 billion. From here, I would like to go over 4 main risk factors that could affect a company's valuation. The Constitution of the Republic of Korea provides workers with rights to collective bargaining and collective action. Currently, there are some ongoing negotiations and bargaining between Coupang and employees comprising labor unions. The unionization of more Coupang employees in the future may remain a potential risk to the business. Coupang's delivery and fulfillment related activities, including its last mile delivery, are subject to legal scrutiny. For example, Korean laws and regulations outline very broad technical safety and health obligations on the employer and service recipient company. Breach of such obligations could result in penalties such as criminal sanctions, administrative fines, and corrective measure orders. The Ministry of Employment and Labor may also order work suspension or use suspension of equipment if it identifies harmful or dangerous condition in the workplace. A breach of these obligations by the employer or the service recipient company may result in potential civil liability. Although Coupang is putting a lot of effort into reaching an agreement with its employees by paying them in treasury stocks, this issue remains an underlying risk factor that investors should be aware of. Another risk factor could be Coupang's competition against Naver, a South Korean online platform that owns the largest search engine in the country. Naver's market cap is nearly $60 billion. Although the two companies haven't directly collided yet, it seems that direct competition is inevitable as both Naver and Coupang are expanding their business into each other's area. For example, leveraging its stable online portal website as a foundation, Naver entered into e-commerce business by launching Naver Smart Store, which matches buyers and sellers just like eBay. But as the lack of logistic infrastructure continued to hamper its business growth, Naver recently signed an agreement with a local courier, which can be interpreted as a direct challenge to Coupang. The winner of this game would depend on how fast Naver could break into the e-commerce market and how solid Coupang establishes its logistics infrastructure. Although Coupang is the leading e-commerce company in South Korea, and the country's e-commerce market is growing rapidly at a compounded annual growth rate of 10% by 2024, limits in the market size, namely the total population of 50 million, could hinder the company's sustainable growth. Because of this, it would be crucial for Coupang to expand its business into new geographies, such as expanding into the Southeast Asian market, or entering into new industries, similar to how Coupang started its food delivery and media streaming services. By now, I'm guessing many of you may be wondering why people are so excited about the IPO and ascribing such high value to Coupang when the company is incurring huge loss of nearly $500 million. The first reason is its market domination. In South Korea, Coupang has 100 logistics centers in 30 cities, and 70% of the entire population lives less than 7 miles away from these centers. During the last quarter of 2020, the total number of customers who have ordered at least once directly from Coupang was nearly 15 million. Considering the fact that the number of households in South Korea is 20 million, this number is pretty surprising. Moreover, if you take a look at this graph, Coupang's customer retention rate is really high. By the end of 2020, the number of premium subscribers was over 4.7 million. These loyal customers pay 4 times more than how much non-subscribers pay, and they have grown not only in numbers but also in how much they spend. For example, a user who purchased a single product in 2016 is likely to buy 3.6 products in 2020. A user who spends $1,000 in 2019 is likely to spend $2,200 in 2020. The second reason I would like to cover is Coupang's improvement in financial performance. Although it made a loss of nearly $500 million in 2020, revenue growth has accelerated and net loss has diminished. Hopefully, they eliminate the shareholders' deficit and turn in black starting this year. If you wondered anything about Coupang or its IPO, I hope this video gave you some insights. Any feedback and comments are welcome. I'm thinking about making some pre-IPO orders in my Robinhood account, so if you're with me, all the best.